Hello everyone, thank you for joining me. This video will show you how to buy stocks of your favorite US companies in Canadian dollars at lower prices. I will talk about a new product available for Canadians. It's called Canadian Depositary Receipt, which are traded in Canadian dollars at a Canadian stock exchange. The reason I'm making this video is to show you how you can buy stocks of global companies with less capital in Canadian dollars with a built-in currency hedge. That is, by not worrying about the fluctuating exchange rates and the associated fees. Hello, my name is David Das. I have been involved in the stock market since the 1990s. I have learned all the investing skills on my own. If I can do it, you can do it as well. I have divided this presentation into 5 different sections. I'm sure you're all waiting to know how to buy these CDRs. That is also included in this presentation. Few housekeeping items. This video is not sponsored by anyone. I'm not trying to sell you anything or any subscriptions. So please relax and enjoy. The description below has all the useful links so that you do not have to write them down. This video is for educational purposes only. I'm not a financial advisor. Please do your own research and invest accordingly. First, we'll talk about CDR. What is it? When did it start trading? Which exchange and what stocks we can buy with CDRs. CDRs are fractional shares of global companies launched by CIBC in July 2021, traded at Neo Exchange in Canada in Canadian dollars. And the best part is that it has a built-in notional currency hedge. We'll talk about that bit more later. Basically, CDRs are affordable ways for Canadians to invest in global companies without worrying about exchange rate fluctuations. When it was launched in July 2021, they started with 5 CDRs. As you can see, as of November 7th, there are 10 CDRs that's traded at the Neo Exchange. And look at the prices of these CDRs. And I have included 2 stocks. One is Apple, which is the actual parent company, which is traded in US dollars. That's 151 USD compared to the Apple CDR, which is $23 Canadian. Same thing with Amazon. The USD value of Amazon stock is over 3,500, whereas the CDR of Amazon is $22 Canadian. Look at the volume of these CDRs. We'll talk about this a bit later. There are several advantages of CDRs for Canadian investors. They trade like stocks, but the best part, I think, is that it is good for the beginners, students, new investors, and people with low investment capital. As I mentioned earlier, they are traded in Canadian dollars, so we do not have to worry about the currency exchange and the related fees. It also gives us the privilege of owning fractional shares of global companies. It has a low risk due to less capital, no ongoing management fees, receive dividends if qualified, and have the voting rights. Now let's look at the 1-month performance of the Apple stock and the Apple CDR. If you look at the charts, these are the 1-month chart. Both of them look almost identical. This is the one in USD and this is the one in Canadian dollars. The actual performance of the Apple stock, it has increased by 5.43%, whereas the Apple CDR has increased by 5.28%. So there's a slight difference in terms of performance over the last 1 month. Look at the volume. These are traded in millions, the original Apple stock, whereas the CDRs, the volume is about 24,000 on November 8th, and the average volume is about 27,000. So volume is definitely quite low compared to the stock of the parent company. Without going into too much detail, I will highlight a couple of things on how the CDRs work. Let us now study this diagram where we have the parent Apple company, which has a return of 40%. If the exchange rate between USD and CAD goes down by 10%, the net return of the unhedged Apple stock will be 26% compared to the 40% return of the company. On the other hand, if the USD and CAD, the exchange rate goes up by 10%, the net return will increase to 54%. So what we can see, if it is unhedged Apple stock, the net return will fluctuate with the currency exchange rate. Whereas in the CDR, you can see we'll have approximately 40% return in spite of all the fluctuations of the exchange rate. On top of that, we do not have any ongoing management fees on CDRs. Now we will talk about notional currency hedge. Each CDR is equivalent to owning a variable number of underlying shares, and this is represented by the CDR ratio. And this CDR ratio changes every day depending on the exchange rate to provide that currency hedge. You can read all the details here, but I think this is a very interesting concept. So the obvious question is how CIBC makes money on CDRs. They say they make money by managing the currency risk, which is at 0.6% per year. At the same time, they are saying the CDRs do not have any ongoing management fee. So how is that possible? So in my opinion, as CIBC is a big institution, they get preferred exchange rates than retail investors like us. So even though they make 0.6% by managing the currency risk, this percentage is less than the discounted exchange rates they receive as an institution, which is built into the CDR pricing. There are a few other things that we need to think about when we invest in CDRs. As I had pointed before, the CDRs has less volume, so it's better to use limit orders to buy and sell. It's a fairly new product, so we have less data, so we need to do our research wisely. And it's better to check the performance of CDRs with their parent company stocks, maybe after 3 months, 6 months, 9 months, or after a year. And we have to be aware of withholding taxes on US dividends, and it all depends on different account types. And finally, there are no options available yet on these CDRs. Now we are at the final part of the presentation on how to buy CDRs. Do your research and then make a decision. Open a brokerage account if you do not already have one. Zero commission brokers are available in Canada. And then buy like a regular stock if your research says so, and then monitor and check for updates. I understand they plan to add more global companies to the CDRs. Hope this video was useful. Thank you for watching. See you next time.